Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. We want to let you know that the open access on investors.com is still going on through October 11th. So it's a great opportunity if you're not a subscriber to, without any sign up or registration, just come in and check out the premium tools that we have on investors.com.
And be sure to check us out on Twitter.
To follow Amy, check out @IBD_A Smith, and for me, @IBD_M Galgani.
And on today's show, we're going to take a look at the cup with handle base. But first, let's take a look at the market. The market had an interesting week. Monday, the biotechs had their worst day in 4 years. Wednesday, we recovered, but it was the worst quarter for the market since September 2011. Then we started a new quarter, the final one of the year. And on Friday, we had a really terrific upside reversal day after being sharply lower earlier in the session.
All right, well, let's see what that looks like on the charts. On the NASDAQ, you can see how it closed lower on Monday and Tuesday, then had a couple of nice up days. Then we had that big positive reversal that Amy mentioned. The NASDAQ closed at the top of its range, and it was up around 1.7%. And trading in the final hour of the week was particularly strong.
The S&P was up 1.43% on volume that was heavier than Thursday, so this constitutes a follow-through day.
Now, this new uptrend that the follow-through day kicks off can offer some good opportunities, but it's not without risk. As we've talked about on the show, not all follow-through days work. So see if the indexes and leading stocks continue to move up next week, and then see if earnings season launches some new runs.
And a lot of big names are showing strength again. We have Under Armour, Starbucks, Target, and Amazon that came back above the 50-day. We have Facebook and Google that are just about right at that line. And a lot of stocks are setting up in bases prior to earnings. The action currently is very constructive.
Right. So now is a good time to see which stocks are setting up potential new bases. And one way to do that is to look through the mini charts that you'll find inside of IBD and the IBD 50, sector leaders, and different lists. And you'll see in there both, are they near a potential buy point? What kind of base are they forming? And when do they report? So this is a good weekend to go through that and start building that watch list.
It is indeed. And this time of year historically can be a good time for the market. Now, nothing is ever guaranteed, but the market sometimes has a nice little rally towards the end of the year. We often look for what we call a Santa Claus rally. That doesn't mean that'll happen now, but as always, just remain nimble and flexible.
Right. And as Amy noted, several leaders are currently forming bases. So let's take a look at a couple of those. One is Starbucks, and it survived, that base survived the flash crash back in August, and it's now back above its 10-week line, and Starbucks reports on October 29th.
And some names that are setting up in bases are Chipotle Mexican Grill, Fleetmatics, O'Reilly Auto Parts, Extra Space Storage, and Edwards Life Sciences.
So let's take a look at Extra Space Storage. It held up very well during the correction, and it found support along the 10-week line, and it traded in this nice tight range as it worked on the new base. And look at the relative strength line. It's remained near or in new high ground. And as a real estate investment trust or a REIT, the stock that operates self-storage facilities pays a dividend, currently yielding 3.1%.
And I've covered this stock in the stock market today. Look through the mini IBD list for other names potentially setting up, and make sure that your watch list is up to date, especially as we head into earnings season. And be sure to read the big picture column every day for nuances relating to the market, as well as leaders that are up and down in volume.
And keep in mind that whichever way the market ends up swinging, whatever prep you do now will pay off down the road. So now's a good time to start building that watch list and pay attention to what the market is doing. This week, we're going to get into part 3 of our series on how to spot the kind of chart patterns that launch these big price moves. And we're going to start with the big daddy of them all, the one that has launched many winning stocks over the decades, and that is the cup with handle.
Yes, the cup with handle base has launched many stocks into big, huge moves over the decades. You could look at a picture of Tennessee coal in the late 1800s and compare that to a cup with handle that Apple formed in 2004, and you know what? They look almost exactly the same.
They repeat again and
again. These patterns do repeat themselves over and over.
So let's take a look at the key criteria that you want to look for in a proper cup with handle. Now, you have to use your imagination a little bit here, but the name comes from the fact that the pattern looks like a coffee cup viewed from the side. So here's the cup, and then here's the handle.
Now first, you want a prior uptrend before the cup with handle base is formed, and you want this to be a 30% uptrend. And then the cup shape begins to form, and the depth of the base should be around 15 to 30%. Some bases are a bit deeper if the market is correcting.
So let's touch a bit on the psychology that comes into play as this base forms. So during the prior uptrend, some investors, they're going to be late to the game. And they're seeing the stock continue to go higher and higher, and they're thinking, I'm going to miss the boat if I don't jump in. So they jump in, but they jump in too late. And they're doing it typically right when the market and the stock are now getting ready to pull back, and so soon they're sitting on a loss.
Now the next thing that forms is the handle. It looks a lot like the handle of a coffee cup. And then we add 10 cents above the high in the handle, and this is the buy point. Volume in the handle, as it's forming, should be light, and it should form in the upper half of the base. Ideally, you want the handle to drift down a bit.
So again, there's psychology and a story that comes into play here. That bottom forms because selling eases and these big institutional investors start to pick up shares. And these are more committed investors who see long-term potential for that stock. But remember those folks who bought back here when it started to form the base, and now they're sitting on a really big loss. So they've probably given up on the idea of making a lot of money on the stock. They just want to get back to break even. So when the stock starts to edge up on the right side of the base, they start to sell, and that's what forms the handle.
All right, now a sharp decline on heavier volume within the handle would indicate that there's still selling pressure on the stock and there's still holders that are bailing out. It also means that a successful breakout is a little bit more difficult, and that's why you want quiet action in the handle prior to a breakout.
And one last point about the cup with handle. There's a minimum length that you're looking for. And including the handle, it's 7 weeks. Now, the handle itself should be at least 5 days long. But know also that that's the minimum. A cup with handle can form over the period of many weeks or even several months, especially during a long market correction.
And it's important to study the major bases, and after a while, you'll be able to spot them more easily. The cup with handle is one that you're going to see over and over again in the stock market.
Right. So let's take a look at some examples, and one is Under Armour. So on this weekly chart, you can see the cup with handle that Under Armour formed in the summer of 2013.
Now notice the cup shape that formed prior to the one that Matt's referring to. It was longer and not quite as tight as the one that launched a big move. Now Under Armour really launched out of that base and made a big move, and volume spiked, showing the institutional buying.
So let's take a look at the elements of that base. Here's the prior run-up, and then it pulls back to form the cup. It finds that bottom that you're looking for, and then fund managers start to pick up shares, and that builds the right side of the base. It's then those weaker holders who bought too late back here when the base started to form. Now they start to sell as the stock gets closer to their break-even point. But look at how the volume dries up. This is critical because it's telling you that the big investors who've been buying from the bottom of the cup as the right side of the base builds, those people are not selling.
Now, this is a daily chart of Under Armour, and on July 25th, the stock zoomed 12% on volume that was 343% above average. Now, you want to see volume increase 40 to 50% on a breakout, showing that professional buying. And notice that that RS line was spiking into new high ground, and this move came on a strong earnings report.
And as we noted, the buy point is 10 cents above the peak in that handle. And we add 10 cents simply because we want to make sure that the stock is punching through that former point of resistance and not just bumping its head and then coming back down. Now, typically, the buying range is up to 5% above that buy point. And you don't want to chase a stock beyond that because then you're more likely to get shaken out if the stock pulls back, as they often do following that breakout. But we chose Under Armour because it gives you an example that shows an exception to that.
Now, gap ups are a bit different. Normally, as Matt said, we don't buy stocks that are extended in price more than 5% above the buy point. But in the case of Under Armour and many other stocks that report strong earnings, you have a gap up in price. Now, because Under Armour moved higher on a strong earnings report and the volume was massive, it's safer to buy this type of a gap up in price.
And as you can see, it worked out very well for Under Armour. It basically doubled in price over the next 9 months.
Now we're going to take a look at some other examples of cup with handle bases.
How would you like an edge that helps you pick winning stocks faster? An edge that is proven to outperform the S&P 500 by 76% since inception, and that you can take advantage of today without spending a dime. More on that in a minute. Each day, our top market team at Investors Business Daily scans our proprietary stock lists and screens to find superior stocks with the most potential for big gains. They analyze these stocks every step of the way to show you bases, buy points, sell signals, and the right time to take profits. It's about as close to hold your hand investing as you can get. Introducing Leaderboard by Investors Business Daily. For a limited time, you can try all of the premium features Leaderboard has to offer for a full 14 days at absolutely no cost to you. You'll receive unlimited access to all of the time-saving research, powerful investing tools, the leaders list, cut list, and expert analysis you need to develop a winning investing strategy. And it's all 100% free for your first 14 days.
We talked about the technical aspects of what a proper cup with handle base should look like, but now here's the fun part.
Right.
All right. Let's look at some stocks that made nice moves out of cup with handle bases.
Right. And remember that we're going through this because these kind of patterns show up again and again and again. And they often show up at the beginning of a new uptrend. So now is the perfect time to make sure that you know what you're looking for and how to spot these kinds of patterns. And to help do that, let's take a look at a base that Starbucks formed back in 2010.
All right, this is a weekly chart of the October breakout. Now, taking a look at the cup with handle base, it was nice and tight prior to the breakout. It was 16 weeks in length. The depth of it was 21%. Now, remember, you want to look for breakouts above the 10-week line or the 50-day.
And you can see how Starbucks fell below the 10-week moving average as it formed the left side of the base. This is not unusual. It happens all the time. But importantly, it got back above the benchmark when it formed the right side of the base. And look at how volume was rising. That shows you that fund managers and other big investors are picking up shares.
All right, so let's take a look at the daily chart. The pivot or the buy point in the cup with handle base was 26.67, which is 10 cents higher than the peak in the handle area. And the breakout was beautiful. Starbucks rose 4%, which is a nice move for a larger, more liquid company. And volume was higher by 98%. And you can see visually that big spike in upside volume, which is exactly what you want to see. It shows that the pros are in there buying shares.
And this brings up a really important point that you want to use both weekly and daily charts when you're reviewing a stock. The weekly charts help you see that longer-term trend, and it gives a good overview of how the current pattern fits into that trend. For example, is it early stage, late stage or not? And then the daily chart helps you spot and confirm that you're getting the kind of big volume that you look for on the actual day of the breakout.
So what was going on with Starbucks at that time? Well, the stock spiked on a strong earnings report, and this was due to an expanded food menu from Starbucks. And they also announced that they would try selling wine and liquor at select locations as a trial to see if they could ramp up from morning and afternoon traffic to later in the evening.
And that big breakout that we just saw came on the Q3 2010 earnings report. And Starbucks reported 9% growth in same-store sales, and its consolidated operating margin had jumped from 8.5% to 12.5%. So the coffee giant at that time also was getting into grocery stores and expanding its presence there. So it was a whole new channel for them. And of course, investors liked what they heard during that report. And look what happened next.
Well, the stock soared from its breakout of 26.67 to a peak in April 2012 of 61.98 for a whopping 132% gain in less than 19 months. Now, these are the types of moves that can significantly change your portfolio. You know, you capture a couple of these big winners, and it can be game-changing. That's why we're always on the hunt. We want to find some of these big winners in the future.
And these kind of big winners always emerge at the beginning of a new uptrend. And we should point out that Starbucks' big move that we just saw in October 2010, that came about a month after we had a really nice follow-through day at the beginning of September 2010. So that's a good reminder of how that happens. And Starbucks by far was not the only stock moving at that time. We had Chipotle Mexican Grill, Netflix, and many others broke out at that same time.
That's how you know if it's a successful follow-through day.
Exactly.
So if you have a lot of stocks moving.
Right.
Now, we're going to look at a cup without the handle, and this is going to be FleetCor. So let's take a look at the weekly chart. This is 2012 of the cup breakout. Now, back in August 2012, FleetCor formed a cup without a handle base. It moved up 12% for the week, and this was a newer stock. It had come public in December 2010.
Now, the cup is very similar to the cup with handle. The main difference is that you don't have the shakeout that comes in the form of the handle. So to calculate the buy point, you're just going to add 10 cents to that former point of resistance on the left side of the cup. And by the way, IBD 50 alerted you to this potential breakout. The analysis under the mini chart inside of the IBD 50 said that FleetCor was 2% below a 41.40 buy point.
And we wrote about FleetCor many times in the months as it staged a monster move. So be sure you're looking at the mini lists that we have in IBD to find these big movers. Your weekly review, the IBD 50, Stocks on the Move, Stock Spotlight, and the Big Cap 20, and many others.
So let's say, looking at this daily chart, that you had FleetCor on your watch list because you found it in one of the lists and did some research. And you're looking at the daily chart again because you want to see if you get that kind of heavy volume on the actual day of the breakout.
Now, the day of the breakout, FleetCor moved 3% higher and cleared the buy point. The volume increased by 108%. Now, looking to the left a few days, volume had spiked higher by 249%.
That's a nice clue as you're looking at
even
and tracking
before
that
the breakout
chart pattern. Exactly.
And in the few days after the breakout, volume spiked 69 and 71% above average. So the pros were in there buying shares.
And look what happened next. On this weekly chart, you can see how FleetCor rose almost 200% in just 16 months. Now, of course, not all cups and not all cups with handle are going to launch that kind of a big move, but they do often generate some very nice gains.
Now, you can find more examples of charts and the successful moves that they made they broke out of a cup with handle base. So here is Matt's book, How to Make Money in Stocks Getting Started, and in my book, How to Make Money in Stocks Success Stories. We really hope that these books will inspire you to become a better investor and hopefully to help you make more money in the market as you learn more about chart reading.
And another thing that can inspire you and get you prepared is to make sure that you're looking at the mini charts inside of the IBD 50 and the various lists inside of IBD so that you can see which stocks are forming these kind of patterns right now as we hopefully wait for a better uptrend to begin.
And it is well worth studying chart patterns to increase your odds of success in the market. Be sure to join me next week. I will be in San Francisco teaching a Level 2 workshop with Ken Shreve.
And you can find out how to register for that at investors.com/investing show. And while you're there, again, be sure to check out the open access that goes through October 11th. And you can check out a lot of the different tools that we have on investors.com.
All right. See you next week, everybody.